I'm delighted to welcome Shaun Smith-Taylor from ThetaRay, one of our Fin members, to the Fin Spotlight today. Shaun, great to see you, and thank you for joining us today. Maybe to kick us off, Shaun, maybe you could give us a 30-second introduction to ThetaRay and your role actually with the company there.
Sure, and great to be a member. So ThetaRay is a company that specializes in artificial intelligence solutions within the AML sector. We are specifically focused on cross-border payments as a growth sector within that market. My role at ThetaRay is Senior Director for Global Solutions. And my real main driver at the moment is packaging the existing solution we have for cross-border payments, launching that via a go-to-market with both partners and also the wider sales community, and really building market awareness around the solution. We have a number of tier one banks that are customers today, and we really are seeing a pivot point within the financial services sector in terms of the adoption of AI solutions.
Maybe let's get straight into some of the detail then. So you guys are dealing with cross-border payments in terms of the AML side and prevention of money laundering. What are some of the main challenges then with cross-border payments and AML that you guys are helping to solve then?
I think there's a couple of different areas. So I think the first area is risk. So at the moment, financial institutions aren't able to operate in medium or high risk countries. We've seen through the last decade the number of banks that have de-risked and correspondent banks that have de-risked their relationships with other banks in the markets. And that's primarily because they don't have the compliance framework to deal with things. Now, what we have seen over the last probably 5 years is an increased focus from regulators on what solutions are actually fit for purpose from a financial crime perspective. And what we have seen is that the tick box solutions, which are normally the rule-based architecture, are now not seen as fit for purpose within the market. Whereas artificial intelligence and its ability to actually identify unknown cases of criminality, not known cases of criminality that an SME within an organization, even though very clever SMEs, have actually identified themselves and put into a rule system, that's the key area from a risk perspective that we're actually fixing live with customers today. The other area is from a revenue perspective. So when you look at transaction monitoring, when you look at AML generally, it's often seen as a control function and almost a cost center to an organization. What we are seeing, and this is where fintechs, payment service providers, and some of the neobanks are really driving forward, and some of the actual innovative correspondent banks, is actually understanding that if you can operate in medium to high risk territories, that's actually a way to enable growth for your business and actually affect the number of customers that you can acquire, the number of customers you can keep, quite frankly. And it really changes the market dynamic. So I think from a ThetaRay perspective, it's both cost and enabling growth that's the key message.
And obviously one of the key differentiators you're calling out there is that you guys are trying to use or using AI as a solution rather than maybe the more traditional method or rule-based method. What's the main differences? I mean, maybe for those people who don't understand quite what that would mean, how would you describe what the AI is doing, which is different from rule-based?
Quite simply, rules are binary. So it's X equals Y, and they're set by humans. So a human knows from its own experience what risk is. That experience is based on past events. Nobody can see into the future. No human can anyway. Or if they can, then they're keeping that a secret and they should bottle it and sell it. From an AI perspective, what ThetaRay have is we have a large number of algorithms that have been built over a number of years. We have 19 patents. So the barrier to entry with our solution is really, really high from any other company in the space. And what it does is it uses a large data set. So let's take 12 to 24 months data from a financial institution. What it does then is it runs the algorithms that what they do is they define normality. So over various parameters, it will define whether the originator, the beneficiary, the correspondent bank, the intermediary bank, what is the normal activity for that institution or that entity. And then what it does is it looks at what are the abnormalities. within the data set.
Hmm.
What it then does is it clusters those anomalies into unknown cases, because by default, they are unknown because they're anomalies out of a large data set. And what this does is it allows a financial institution to A, reduce the number of false positives, because again, we're defining normality. So a lot of financial institutions have hundreds of people that just review false positives on a daily basis. And 95% of those false positives take 5 seconds to actually work out that it's pointless, they shouldn't have had to review them. What we do, because we're identifying the abnormalities within the data set, what we are raising is a high number of detection-worthy alerts. So 95% of the alerts that the ThetaRay system actually publishes as alerts for an investigator to review, action is taken on them. Now, within the market, it's flipped the other way around and it's about 5%. And that's the key difference. Because you're actually using algorithms and artificial intelligence, you're actually identifying the unknown cases of criminality rather than the known cases.
And I mean, it's obviously a really interesting area, because you're moving into sort of an area which is maybe unexplored as well to some degree, and picking up things which haven't been picked up before. And obviously you referenced that one of the key differences here is one a key thing for clients here is uncovering those risks. Maybe you can even put some color on that for people as well. By have you seen examples then, as you've implemented the solution, where customers have seen risks that they didn't know were there, or that they kind of maybe had an inkling were there but couldn't quite prove or find, and brought those to the surface, and what did those look like?
Yeah, that's a great question. So in every single installation of the ThetaRay software, we identify unknown cases in every single data set. So any customer that's ever gone live in any use case, quite frankly, of the ThetaRay solution has identified cases that they were not aware of with the traditional tools they previously used. As importantly, we also identify 100% of the red flags that an incumbent or existing solution has identified previously. So it's not that we're identifying new ones and we're missing existing ones, we are covering the existing risk. I think to put some flavor in terms of examples, we were approached by a large tier one bank in the UK. There's not many of them, so it won't be difficult to work out which ones it could have been, who provided us with 12 months Swift data. They didn't tell us why. And they said, can you run this against your algorithms? And just let us know if there's anything that doesn't look normal. It was run against the algorithms. Within 2 days, we'd share the results back, and it gave them 8,400 unknown cases of criminality they weren't aware of. Unsurprisingly, they saw that as quite a value add in a very short period of time. And I think that's the key thing from a ThetaRay perspective. So we have focused, so our algorithms are unbelievable. They really are. They're unbelievably effective. But what we also do is it doesn't take months or years to get the ThetaRay solution live. We're a product-led company. So from that perspective, time to market and low cost of customer acquisition is really important to us. And one of the key things we have actually invested in is looking at the customer journey and understanding where it takes time to integrate a customer. And the key areas for that is acquiring the data. We have an automated transformation module. All we need is a location on the bank's own server. We will transform Swift data from RGE files or any format really into our existing CSV file. And then we have packaged an internal red flag and feature list from an AI perspective that is based on our projects with various tier one banks. Now, unsurprisingly, from a transaction monitoring perspective, 70 to 80% of the risks that the banks look at are very, very similar. So we have a defined prepackaged solution that data can be run through, analyzed effectively very, very quickly. And the reason that's important is it allows the bank to actually get value and proof points early in the journey rather than having to do a X months or X years analysis or investigation. And that's the key thing we're bringing to market as well.
You touched on something else earlier, which was around the opportunity on revenue. And maybe I just want to dive into that as well. I mean, have you seen with the implementation of ThetaRay that people are able to actively change the risk that they're applying to certain maybe correspondent banking relationships, and also then engage in new relationships then because they have a better or more higher comfort level with what the risk really is on those through those other correspondent banks.
Yeah, absolutely. And I think this is an area I do want to focus a little bit on in terms of, I guess, increasing the understanding. So from a use case perspective, we have a large tier 1 European bank that has taken the ThetaRay solution. And what the solutions enable them to do is to open or expand into 5 additional countries that they didn't feel comfortable operating in previously. Now, obviously, the customer acquisition, the transactions, the revenue they're getting from those countries that they weren't able to do before is a huge positive to the bottom line of the organization. I think the big thing from a correspondent banking perspective is it's multifaceted. So from a correspondent banking perspective, through our solution, we can enable the correspondent bank not to have to de-risk its partners in specific countries because the control framework is enhanced. But also as a flip side, if the correspondent bank wants to go into a new market and they want to onboard bank X from country Y, they can do a Wolfsburg. They can go through a pretty manual CDD process that tells them what the risk of that bank is through historic data. Or what they could do is they could get that bank that wants to be onboarded into their network to provide ThetaRay with 12 months of transactions. By providing 12 months of transactions, we can risk rate that bank far more effectively than any institution in the world. And I think that's really important. And I think where we have seen a lot of interest from a revenue perspective is within the fintech and the PSP market. So for correspondent banks, you're going to have a personalized solution. You're going to be operating multi-countries. And that's great. We have that solution live today. What we've also done is we've packaged an out-of-the-box solution that, like I said, can be live very, very quickly in a number of weeks. And where that really, really chimes in terms of market and product fit is within the payment service providers and the smaller fintech banks, because they can move quickly and they want to move quickly. And they're actually the institutions that are making decisions based on revenue. So when you've got a fintech or a PSP, they're there for a specific use case, whether it's transactions from one country to another, because it's normally a point-to-point market. And what we allow them to do is actually to continue to maintain their existing relationships with large banks, but also then allows them to push into markets that they currently couldn't serve. And I think this is important, specifically when you talk about financial inclusion. So everybody talks about financial inclusion, but what ThetaRay is actually enabling the financial ecosystem to do at the moment is not have to de-risk when you can grow your wider payment ecosystem. And what that does is it has a net benefit impact from a financial inclusion perspective, which from our perspective, we're really proud of.
And when you're going about the sort of, what you were touching on just, I suppose, at the start of that last answer, which was around you're able to risk rate clients very quickly. What are you just taking the transaction data and looking at that and effectively analyzing that, or are you taking multiple different data sets as well, so the KYC information or other data or other data sets even as well?
So from our perspective, we have 7 specific data sets outside of transaction activity that we can look at. It really depends on what data the customer has. So from a high-risk country jurisdiction perspective, we have a data source that is completely our own. It's packaged together. We look at, I believe, over 30 different sources, whether it's FATF jurisdictional risk, whether it's transparency international, et cetera, et cetera. So they're defined lists. We have a key risk word list in terms of specific words that you would want to understand if a transaction had that activity in them. But then there's also a list that the customer can provide intelligence into. So we have a BIC risk list. So that then allows the customer to actually identify through their own due diligence if they categorize a specific bank as high, medium, or low risk. That can also be done from a CDD perspective on the customer perspective as well. So the answer to your question is yes, we have additional data sources. The great thing about the solution is a data source is really simple. It's usually a table. It's a table of data. We added in a table of data or a specific data source for one of our customers 3 months ago, and it took 2 days to do. So if there are any additional data sources that we need to add, and there will be, we're completely aware of that, we have a roadmap to actually extend it into, then it's something that actually can be done very, very quickly. And I think one thing that is really important, the speed to market's obviously important, but the speed of turnaround from ThetaRay is very, very quick as well. So you won't, I know within lots of implementation timescales, you go from cycle 1 to cycle 2 in, maybe 3 months. We do it in 2 weeks. The end-to-end process is very slick.
Just interested, and this might be a tricky question to answer because you might not see the whole process, but once the unknown risks have been uncovered and investigators are looking at those, what tends to be maybe not so much what they're finding, but how is that influencing what they're putting back into the control environment, or like what are the sort of key actions that some of those investigators or financial crime professionals are taking off the back of some of those unknowns that have been uncovered?
It's a good question. So when I talk about 95% of alerts being detection worthy, what I mean by that is that it's either been escalated from line 1 to line 2 for additional review. At that point, there's various different actions that have been taken. The risk rating of a customer may change. It may be that a specific control is placed on that customer because the risk's in a specific area, so that can happen. Alternatively, it could be that the relationship with that customer is ended. It could be that a trigger refresh is conducted on their due diligence. But quite likely what it does result in is a suspicious activity report being filed with the regulator. And one thing that's really interesting, and I think this is how the solution will evolve over the next few years, is really looking at, we at ThetaRay has very, very close relationships with regulators globally. And we've got an interesting case study, which isn't actually released yet, so I can't actually go into it today. But it's super interesting in terms of how, let me just say, our agnostic platform can take data in, can review huge amounts of data from different banks of potentially different alert types, and identify typologies and unknown cases within not necessarily a sector, but within a country. And I think that's going to be really important.
I mean, one of the things that comes up again and again and again in terms of the fight against financial crime more holistically is obviously people saying, well, we need to be able to share data and that kind of example. So it'll be super interesting to see whether that is a space that moves forward in the next sort of 5 years of data sharing, even if it is within countries or regions, whatever that might be. What do you think might be, maybe just a bit of a tangent here, but what do you think might be the possibilities of what could happen if that was allowed to happen?
I mean, what would happen is the efficiency within process. Intelligence sharing is one of the most powerful tools any industry has. Now, interestingly, within the fraud sector, it's fairly commonplace. If you work in a payments company, and you'll often get a call from a fraud department in another bank that says, hey, one of your customers, is this your customer, is this transactional, something's just happened. Doesn't usually happen within the AML sector. So I think to your point, I think, Swift still have a unique position where they're owned by banks. So they have the opportunity to drive forward innovation in this sector with less barriers than any other technology company, quite frankly. However, what we have seen is regulators now are understanding the power of AI, and they're actually looking to AI to actually solve issues of what you've just discussed. There's only so much I can say in terms of the use case we're talking about, but it is highly likely in the coming months that a regulator will begin using AI to analyze reporting events from all of its banks rather than actually just relying on the bank's controls themselves.
Yeah.
That's sensible. That has been actually in the offing for many years, but it has taken forward-looking regulators to actually take a leap more than anything else. So yeah, I think it's an interesting area. I think there'll be lots to discuss over the coming months in this area. And like I said, we've spent a lot of time probably over the last 3 or 4 years, not really focusing on market positioning from a financial services perspective fully, but really understanding, where's the adoption going to come from, and where the adoption has really, really taken off has been from a regulator perspective. And there are multiple large regulators around the world that are now openly coming out and saying, look, rules-based systems, which have historically been seen as tick box exercises, they're not good enough. You need to move to actually a fit for purpose financial controlling framework. And the main area they see that is within AI.
I mean, you talked about your algorithms, which have obviously been developed over time, and obviously where you guys have found a really good fit being in the cross-border payment space. What's sort of been the journey for ThetaRay? You guys are relatively new, so this is still sort of relatively early in the journey, but maybe sort of what's been the whistle stop kind of development journey for the product, and I guess what's next as well for ThetaRay?
Yeah, so the algorithms are, they're the brainchild of 2 incredibly clever maths professors who founded the company. The algorithms and the platform, like I said earlier, rely on huge amounts of data being added into the platform and then define normality, so therefore can identify anomalous and unknown cases afterwards. The early stages of the evolution was in the aerospace industry, because that's an industry that has loads of data and they are always looking for unknown cases, right? Because unknown cases in airline industry is usually quite bad, and you want to actually spend a lot of time focusing on that. So that was an area that we focused initially. However, from a AI perspective, there was a boom within financial crime and specifically within fraud. So that was an area then we actually pivoted to about 3 to 4 years ago. We really saw the AML space, the wider AML space, as a really good market fit for the product. I think one of the challenges we had, and the reason we've gone from financial services as a really broad area to narrowing that down to cross-border payments, is there are so many use cases for our platform. We could go into 7 or 8 different markets at the same time. Whereas actually what we want to do is we want to create defensible foothold within a market that we can add significant value to. And as we started working with a couple of our early customers 3 or 4 years ago, it started in the AML space and then became very, very clear that actually cross-border payments and transaction monitoring specifically is actually where the real sweet spot. And the reason for that is within the AML space, there are a number of companies that talk about AI and their solutions being artificial intelligence driven. I think what we have found is there's a real distinction between companies that are pre-alert generation versus post-alert generation. And what I mean by that is a lot of companies that talk around having an AI solution, specifically for transaction monitoring, actually are added on top of an existing rules-based system. So the rules-based system will be spitting out loads of alerts, and that system will plonk on top and it'll say, no, ignore half of these because there's no point. That's incredibly inefficient because you've got 2 integrations, 2 companies, 2 license fees. It's crazy. However, there are a number of companies within that space focusing on it. Whereas the pre-alert generation, which is where ThetaRay actually position themselves, is different because we're replacing the rules-based architecture. So therefore you only need a single solution. And quite frankly, within the cross-border payment space, there is nobody that's specializing in this area. ThetaRay have built a specialized cross-border payment solution for the sector, not a retail solution that's been brought over to actually try and fit into the cross-border payment world, which doesn't. In terms of where we're going next, I think that's the fun part, right? So today's a good day for ThetaRay. So really excited that this morning we announced our new funding round, which is going to allow us to really add some rocket fuel to the expansion plans. But the key thing for us is to really attack the cross-border payment market, get a defensible foothold within the market, and then we will expand to adjacent markets. And what I mean by adjacent markets is, if you look at cross-border payments, a large number of those transactions are trade related. If you think cross-border payments generally is poor from a compliance framework perspective, trade's even worse. Trade has an incredible amount of manual processes in terms of data collection. The actual transaction monitoring tools that are used within trade finance are pretty prehistoric. We do have a live use case within trade finance at the moment, so that's an easy area to go into. From a ThetaRay perspective, what we do is we test market and product fit, and then we package the solution and go to mass market. So that's a natural extension. What I was talking about earlier in terms of regulators. So, if a regulator has X metadata from all of the banks and actually wants to understand whether there are typologies that are emerging without having to go through it manually, which is quite frankly what they have to do today, then putting that into an AI platform and allowing a set of algorithms that are already proven to identify unknown activity very, very easily is a natural extension. And then also, if you think of the cross-border payment market just as a segment itself, then you have the banks, the PSPs, but you also have corporates. And I think corporates is a super interesting area. A lot of corporates are now getting more involved in the payment journey. A lot of the corporates are, and some of the largest ones in the world, have their own payments divisions. And it's a bit of a unknown as to what controls should they be actually putting across that payment activity, or can they rely on the banks? So I think the corporate activity, whether it's actually the bank's controls that need to step up through the changing dynamic of their activity, or whether the corporates themselves actually have to invest in new technologies, is an interesting area that we think there's some legs in terms of that as an adjacent market as well.
Definitely. I mean, what are maybe some of the challenges you guys see in terms of or obstacles you come up against when you're speaking to potential clients around why they're hesitant to move forward? I know AI has moved forward and people are getting much more comfortable with it quickly, but do you still come up against obstacles around, okay, well, what is it really doing? Is it how can we understand what the outcome has been, or what it's doing, or any other, I guess, challenges you come up against through the we're talking to clients and prospects?
Yeah, I think it's really interesting, because every sales engagement that we have, when our solution's tested, if that's the right word for it, or analyzed, the message is really clear. From a solution and technology perspective, we're always the number one choice. On the very small number of occasions that we don't actually, and it is a small number of occasions where we don't actually win the bid that we're going for, it's usually because they're not ready to move to AI. So there's still an adoption, and this is changing, but I think there has been over the last, say, 3 or 4 years, there's been nervousness, specifically from large banks, that, oh, hey, why don't we just stick with this safe traditional software company that's a tick box, and the regulator knows it'll all be okay. So I think that's one area that is changing now. As I said, the regulator is now going much beyond the fact that tick box rules engines aren't the way to control your compliance framework. So I think that was one barrier that we are overcoming, which is really, really good. And I think the other area that we've really started focusing on is the total cost of compliance. So, if you are comparing a pretty standard rules-based architecture versus AI, then, the cost base from a license perspective isn't actually that different, to be perfectly honest. I think the rule-based architectures have been cash cows, so they've had a high price. What isn't taken into account when making these decisions is the resource that you actually need to actually manage those alerts. So if you need a team of 10, 20, 30 extra people, then that cost isn't really understood. So I think that's a key area that from a market positioning perspective, we're focusing on. And I think the other key area is that the resource isn't the only thing. You're going to have people that come in to actually review what the analysts are doing. So you don't only need the analysts resource, you need the QA resource in terms of ensuring that they're doing the appropriate thing. You also need usually a consultancy company that will come in and review the rules that the humans have set, because they have to, right? And they have to show that there's an audit trail where they've gone through, they've got a rationale for why this rule's the right thing, the right thing to do. They've got a date when it was last tested that it was valid. So there's a lot of hidden cost, I guess. And I think the interesting thing is, because it's now moving from cost to revenue growth, that conversation is changing. But I think that's one area that's been a bit of a slow moving area. And I think also just the environment from a COVID perspective. I think investment in new large platform changes was put on hold for 6 months at the start of the pandemic, which, by the way, isn't unusual. It's completely understandable. So I think that's probably delayed the adoption. But I mean, what we are seeing now, and we speak to the majority of tier one banks globally, it's now not a case of if they're going to move to an AI solution. It's definitely a case of when. And I think that's indicative of how the market has changed and the realization that a different, better approach is needed.
I think that's a very good note to say thanks, and probably leave it there. Shaun, thank you so much for joining us. Great to hear about ThetaRay, and really exciting to hear, I guess, all the the funding round and everything that's going on, and I guess where this is all where it's all going. Thank you for being so transparent as well. Very interesting to hear some of those stories, and good luck with everything that you guys are doing.
Great, appreciate your time.
Thank you.